But first, let's try to make sense of this week's markets. What you can see here is that the ASX 200 ahead another 0.7% over the week, with energy prices again higher. Our currency today buying 74.69 US cents. That's up around 0.5% over the week, but it was a little subdued after the Reserve Bank bought $1 billion worth of 3-year bonds on Friday. Now, the best performing stocks in the top 200, they were all from the tech sector, and all companies that have recently had big falls. There's Nuix, down 63% this year, but up 18% this week. Artificial intelligence company Appen, it's ahead 13% in the past week. And Nearmap, which has been in better shape this year than the other two, but up 11% also this week. Heading down the fastest, well, Whitehaven Coal, it was down by 11%, you can see, and Flight Centre fell 10% after a performance update at its annual meeting. But that's all a bit odd, given the reopening of Qantas's international flights this week. There's also the iron ore miner Mineral Resources, down 10% on broker reviews. But this week, one of the market highlights was no doubt Bitcoin. It went through record prices above $63,000 US, or 83,000 Australian dollars. Now, while digital currencies are increasingly finding a place in society beyond just being a place for pure speculation, there are still signs of absolute excess. Take this woman here, for example, New Yorker Maren Altman as the #1 example.
Hi, I'm Maren. I am a professional astrologer, current philosophy graduate student, and entrepreneur.
The 22-year-old you see is using her astrological skill, knowledge, whatever the right word is, to pick the price of Bitcoin.
If you're excited to look at the upcoming astrology for Bitcoin for 2021, make sure that you like, subscribe, hit that notification bell so that you never miss what the stars have in store for you, financially or otherwise.
But Maren is no deal. Where she really has the potential to make money is from her TikTok account, now 1 million followers strong and growing.
I get a lot of people as a joke saying things like, I trust you with my life, or like things like that. And I think that a lot of it is satire, because I think a lot of people do understand that I'm not an oracle.
On a more serious note for the future of cryptocurrencies for our nation, this week the Senate Select Committee on Australia as a Technology and Financial Centre handed down 12 recommendations on the nation's digital currency policies. Joining me, the chairman of that committee, Senator Andrew Bragg, and from London, Mark Carnegie, historically a mainstream investor who's embraced crypto with his own digital currency funds. Can I just start with you, Andrew, Senator Andrew Bragg, and that is in regards to one of these recommendations broadly, and that is that Treasury review the merits of a central bank digital currency. Given the fact the Reserve Bank until now has said that cryptocurrency is not real currency, that it alone issues the currency of Australia, how does that reconcile with where the Reserve Bank sits right now?
Well, g'day, Ross. It's a great question. I mean, the RBA has independence principally for monetary policy purposes. I don't think that the RBA needs to have independence in terms of payments policy, and payments are a really big deal now. Payments are mainstream economic policy areas, and my view is that the Treasury, which reports to the elected government through the Treasurer, is the right agency to be conducting a review of our policies in this space. So I think the Treasury should conduct a review of a retail central bank digital currency.
Yeah, so the one thing about this, though, is that if they don't have the right to basically legislate over the payment system, the question is there, it's about currency, isn't it? It issues the currency, it prints the notes, it prints the coins right now. So it does have some role to play in terms of our future currencies. These, if you like...
Look, it certainly, look, it certainly has a role, Ross, but I mean, I don't think that we should be giving the RBA a monopoly over all our judgments in this area. I mean, that's basically a reflection. Well, I mean, if we were to do that, then I think the elected government would be abrogating its responsibility to take a view on these critical issues.
So I'll go then to Mark Carnegie because, you know, from your perspective, you're, of course, creating funds, you know, one of them based in Singapore right now, and that's also partly as a result of legislation that you think isn't keeping up here in Australia to allow the proliferation of such funds as yours.
Yeah, I mean, look, we're driven offshore because of the ambiguity in legislation in Australia at the moment and how to regulate these assets. We're now running as much money in crypto as we are in mainstream as a consequence of how quickly this is changing. I commend Senator Bragg. I think he wrote a really, really fantastic report, but I think the chance it gets implemented is virtually zero, because I just don't think that he's going to be able to find a way through the entrenched forces of the status quo. And as you've just heard, the RBA is a really, really good example. We've got 3 or 4 proposals in front of us to collaborate with people about creating a mainstream Aussie dollar stablecoin, and there'll be a whole lot of people create a drama around that when it happens. But trust me, they won't have opened the file by the time there's 10 to 20 billion in an Australian dollar stablecoin, which is effectively a synthetic CBDC.
Okay, so just one thing there with you though, Mark, and that is, do you think there is actually danger here that our central bank could lose control of our currencies if it doesn't act, quickly, and the government doesn't act quickly? Given the fact that none of us right now actually transact in notes or coins anymore, we're all doing it via cards and electronic payments. Is there a danger that governments and central banks lose control of their currencies?
Well, certainly, if you take 2 examples that are clear. The first one is the Nigerians who tried to ban crypto, and it absolutely led to a collapse in their remittances through the central bank. So there's an example of losing control of it. And the second one that everybody knows is the American Federal Reserve's concerns about Tether, which is the most widely distributed US dollar stablecoin, as a synthetic US dollar. And there's deep concerns that there's problems with that stablecoin. So yes, I mean, the issue here, Ross, is no decision is still a decision. And the decision to stick your head in the sand, which is, universally what's happening, but for Senator Bragg's light on the hill about this with regard to Australia, is devastatingly concerning to me, because just nothing to do with the stablecoin, Ross, but just the regulatory environment at the moment means that sophisticated investors can get sophisticated advice about crypto, but the rest, the retail community, can't go to a licensed planner to talk about crypto because you're not allowed to give advice on it. And it means that all these pond scum essentially prey on the most vulnerable in Australia, a situation that I just don't think should be allowed to continue.
All right, I'll go back to Andrew Bragg. I want to come to that issue about consumer protection. But before I get there, again, go back to the role of government and whether ultimately Australia could be at risk of losing control of its currencies, mainly because there is no, if you like, appetite to try and issue cryptocurrencies of our own.
Well, there's a few issues you've raised there, Ross. I mean, the first is I think that there might be an appetite for us to move into this central bank digital currency space. Secondly, I'd say that the big risk we're facing right now is the loss of brains and the loss of capital offshore to countries that have a more sophisticated regulatory environment like the UK and like Singapore. I mean, it's happening. You've already seen Australian companies seek and obtain licences to run crypto markets in Singapore and the UK. And you've heard Mark on this program say that he's now running funds offshore for that reason. So we need to stem that tide, and I think that the Senate's plan is a good place to start. In terms of consumer protection, at the moment it is totally unregulated. 1 in 5 Australians has cryptocurrency, so lots of people are already invested in some form. And so I do think it's very important that we do have a regulatory framework, not just to protect consumers, but also to drive that investment onshore.
So one of the issues here is really about custodial services. And of course, this is, if you like, one of the bedrocks of the way in which managed funds and superannuation funds operate. That there are trustee companies that they basically, if you like, are the repositories, that the people who are managing it can't put their own hands on the money. Otherwise, they're in breach of the law if they try to. This is also one of the issues in crypto, isn't it? That you need to have really this safeguard in place so that when people put their money there or entrust their money there, that they know that it's safely managed.
Oh, correct. At the moment, it's the Wild West. There's no rules. Anything goes. You've got billions and billions of dollars invested into these schemes and these products, and there's nothing there. So we've recommended the custody system. I think that would build on Australia's strengths. We already have one of the largest physical custody businesses in the world because of super. And so I think that's a really key recommendation. And I think I should address what Mark has said. I think, and he's right to be sceptical, but, you know, these changes we've recommended, which are structural corporate law changes, I think can be delivered by a government, by an executive government that is determined to be a reforming government in this payment space. And the first copy of the report actually went to the Treasurer, Josh Frydenberg, yesterday. I personally delivered it to him. And so one of my jobs is to try and push this policy along.
So, Mark, if I come back to you, do you sense as we go forward that the digital currencies are going to be used as they are right now as a form of investment where people are hoping really that the value of these are going to continue to rise as a result of their scarcity? Or do you ultimately believe that these will be used as a form of payment?
I think already, Ross, there's so much. The industry has so many different dimensions. I think Bitcoin and Ether ultimately are currency stores of value. I think Solana, Hedera, Polkadot, Binance, all those other things are very much attacking the $140 trillion that gets transferred each year across the SWIFT network globally.
I'll tell you what, Senator Andrew Bragg, it's a big piece of work, there's no doubt. We'll come back and talk about it in the future. Thanks for your time.
And thank you, Senator Bragg, on behalf of the Australian people who are in this area. Really, really high quality work. Thanks, Ross.